The dollar was trading in the 10 to 20 range. Some of you may remember this. In the 1990s, it reached 30. $1 was equal to 30 Indian rupees. At the turn of the century, it was 44, and today, 80.14. The Indian rupee has breached 80 against the US dollar.
$1 के मुकाबले 80 के आंकड़े के बेहद करीब पहुंच गई है। रुपया जितना तेजी से नीचे गिर रहा है, उतना ही विपक्ष सरकार पर ज्यादा हमलावर हो रहा है।
Namaskar to everyone. Hi, this side is Amrit Kant, and once again I welcome you all in a short video analysis. So today we are going to talk about a very important issue, which is something related to Indian economy. We have heard about this issue since long back, and I hope you might have predicted what I'm going to talk about. Yes, we are going to learn about the fall in Indian rupees. So falling in Indian rupees is one of the relevant issue for us. If you look the news channel, if you look the newspaper, this issue, the fall of Indian rupees against the US dollar, is one of the relevant issue. So today in this short video episode, I will try to make you all of you understandable about why is Indian rupees falling. So let me quickly summarize what we will be learning through this short video episode. We will try to comprehend the reason why is Indian rupees falling. What are the factors which lead to fall in Indian rupees? We will also try to understand the possible consequences of this fall of Indian rupees against the US dollar. And finally, we will conclude our analysis by looking forward some policy implication which will be helping us to uplift the value of Indian rupees. So, I request all of you to see my video, to watch my video till end, so that you would able to get a complete knowledge about this whole scenario. So before going to the reason which leads to fall in Indian rupees, we will have to understand how the value of US dollar is determined in Indian economy. The value of Indian dollar is determined based on demand and supply. There is the price at which the demand of dollar and the supply of dollar is equal, which lead to ultimately the price, which ultimately determine the price of the dollar. Okay, and in this way the value of dollar in any financial market is determined. So when we talk about the Indian economy, in Indian financial market, the value of dollar is determined how much dollar is supplied in economy, how much supply of dollar is available, and what is the demand of dollar in the Indian financial market. So based on that, the value of dollar is determined, and that is what the exchange rate, because this is the rate at which we are willing to give up our currency to get $1, and this is what the simple understanding about the exchange rate. And in this way, the supply and the demand of foreign currency in Indian financial market determine the exchange rate. So after understanding how the exchange rate is determined, how the value of dollar in terms of Indian rupees in Indian financial market is determined, let's move to understand the factor which is leading to fall in Indian rupees. The factors can be broadly classified into 4 factors, and these factors are: number 1, the rise in interest rate by the Federal Reserve Bank in United States. Number 2, the surge in crude oil prices globally. Number 3, the huge and massive sell by the foreign institutional investor in the Indian financial market. And finally, the less aggressive policy of the RBI. So these are the 4 factors which is ultimately leading to fall in Indian rupees. Let's try to comprehend all these factors in detail. If you talk about the inflation rate in the United States, the inflation rate has breached the historical record. If you, the time when I'm making this video, the historical data, the data of the US Federal Reserve actually exhibit the inflation rate in the United States has touched the remarkable level, which is 9%. The surge in inflation level across the world put the economists all around the world into trouble. And therefore, what the United States Central Bank, which is the Federal Reserve Bank, has massively increase the interest rate. And this increase in interest rate is done because to combat the inflation level, because the inflation is rising. The people are complaining because all the items in across the world becoming more and more expensive. To combat the challenges of the inflation, the interest rate across the world, it has been increased. And the same thing has been done by the United States Central Bank, which is the Federal Reserve Bank. The Federal Reserve, if you look the Federal Reserve for interest rate hiked. In January, the interest rate in United States was 0.24%. And now in September 2022, it has increased to 3.25%. So if you will look the data from January to September 2022, within the 9-month period, the interest rate has hiked by 13 times. And this is what the massive increment of the interest rate since 2008 global debacle. Now, here the question arises, how the rise in interest rate in the United States lead to fall in Indian rupees? And here the answer, when the interest rate in United States increases, it attract all the investors across the globe to invest in United States, to put their money in United States. Why? Because they are getting more and more interest to save their money in bank account. So here the things is, the crux is here. When the interest rate in United States has increased, it leads to the US investor not to invest their money in Indian stock market or Indian market, which is ultimately leading to fall in supply of the US dollar in Indian financial market. And therefore, when the supply of the dollar in Indian market is reducing with the constant demand of dollar, the price of dollar automatically will increase. And this is one of the reasons which ultimately leading to increase in the value of the US dollar. The price of US dollar in terms of Indian rupees is increasing. The recent turmoil of the Ukrainian and the Russian crisis lead to increase in global crude oil price across the globe. The global crude oil price from December 2021, the global crude oil price was approximately $90 per barrel, and it increased in April 2022. It reached approximately $135 per barrel. We know that as India is highly dependent on the import of crude oil. We must know that India imports approximately 90% of the crude oil requirement, and all the import bill is paid in United States dollar. And here the crux, because if the price of the crude oil is increasing, it leads to increase in import bill, and for paying the import bill we need more and more dollar, because India pays the bill of crude oil in dollars. So if we are paying more and more the crude oil bill in terms of dollar, it ultimately leads to increasing demand of dollar. And again, here is the crux, because if the demand of the dollar will increase with the constant supply of dollar in Indian financial market, ultimately the price of the dollar will surge. And therefore, we are experiencing that the price of dollar in terms of Indian rupees is increasing. And this is another factor which is leading to fall in Indian rupees. According to the Norma analysis, they pointed out that at the global level, if the oil price increases by $1, the India's import bill of the crude oil increases by $2 billion. So $1 increment leads to $2 billion increase in import bill. And this is the massive, amount. So ultimately, the surge in crude oil prices creating the trouble for the Indian rupees. Now, the foreign institutional investors are those investors who do not reside in India, but they are from outside, and they are very interested in Indian stock market, so they invest in Indian stock market to earn return. So here right now in this circumstances, what is happening? India is experiencing huge selling by the foreign institutional investors. The foreign institutional investors are selling their holding or their share that they are holding in the Indian financial market. They are selling, and they are keeping their money, they are parking their money in their respective countries or other countries' financial market. So when they are taking back their money from the Indian financial market, it is ultimately leading to more and more demand of dollar, because when they are pulling back their money from the Indian financial market, they convert Indian rupees into dollar and put back their money into their respective countries or other financial market. So once again, what is happening when they are taking back their money, the demand of dollar in India increasing. In Indian financial market, the demand of dollar is increasing. And when the demand of dollar increases with the constant supply, once again, the law of economic supply, that the value of dollar will increase. And if we look, RBI is the custodian of foreign exchange, as we know. RBI is the central bank. So RBI has responsibility to save Indian rupees. And RBI did that. RBI has put in a lot of amount of dollar to save the Indian rupees. And if we see the data, it is huge, right? But there is a limitation. RBI has its own limitation. RBI cannot go beyond that, right? If we look the data, it shows that our foreign exchange reserve has fallen approximately. It was in some 1 year ago, our foreign exchange reserve was approximately $640 billion, highest ever. Now, because there is huge dollar flow which has done by the RBI to save to Indian currency, our foreign exchange reserve has fallen down to approximately $550 billion, below $550 billion, and which is the approximately less than 10 months import requirement. So RBI is less reluctant to infuse more dollar in Indian financial market to save the Indian rupees. And this is the logic that the RBI has given, that the dollar index is in the peak. Dollar is gaining momentum all around the world, and which is the fact, because it is not the Indian currencies which is going down, the currencies across the world which is falling against the dollar. So the RBI is not willing to infuse more dollar to save the Indian rupees, and this is the reason that Indian currencies is falling more and more. It is hit. Let's understand how the fall in Indian rupees impact us. The impact of or the consequences of the depreciating Indian rupees can be classified in two ways. Generally, we have a perception that if the value of rupees falling against the dollar, it will have a negative impact on us. But there is rebuttal. We can also derive some positive impact through the fall of Indian rupees. Hence, here we have to understand the consequences can be classified into two ways. One is negative consequences and another one is positive consequences. So let's understand the negative impact of the fall in Indian rupees. So the first negative impact is that the import become more costlier, and it leads to increasing inflation in the economy. As we know that there are many commodities that we are importing from across the world. We do not have substitutions of that product, and therefore we are highly dependent on the import. And one of the example is the crude oil. So we have been experiencing that when the crude oil prices increases across the globe, it leads to increasing inflation rate in India. Why? Because import of crude oil become more costlier because of the fall of Indian rupees. And when the import of the crude oil or import of the commodity that we are importing from the other country, if it becomes more costly, ultimately what will happen, it will impact the cost of the production, and therefore the inflation rate, the prices, the general prices in the economy automatically surge. So if the value of Indian rupees will fall, there is a possibility that the import bill will be more and more, cost of import will be more and more, and which will lead to the increasing inflation across the country. The second impact of the fall of Indian rupees is that there will be huge current account deficit. Right, the current account deficits of the economy increases. And what is current account deficits? We not need to worry. The current account deficit is the difference between the value of goods and services that we import and the value of goods and services that we export to the rest of the world. And that is the difference is the current account deficit. So let's say if we have imported the value of 100 rupees goods from the across the world, and we have exported at least 80 rupees value of goods and services to the rest of the world. So 20 rupees is the current account deficits. So here, when the value of Indian currencies fall, when the Indian rupees falls against the dollar, our import bill increases. And when the import bill increases, it leads to more and more the value of import, and therefore the gap between the value of import and export increases, which lead to increasing current account deficits of the economy, which is not good at all. The third consequences is what? That it leads to more and more capital outflow from the country. As the rupee become weaker and weaker against the dollar, it ultimately hits the return of the foreign institutional investors, because their return is in the rupees. So when the rupees value is falling, their return also falls. So ultimately they get less and less return because of the fall in the value of Indian rupees. So therefore what they do is they sell their holding, they sell their investment from the Indian economy, and then they pull out their money and take back to their respective nations, which ultimately leads to the capital outflow rupees. So when the Indian currencies falls, it negatively impact the foreign exchange reserve of the country. And data clearly shows that when our Indian currency was very strong, we had a foreign exchange reserve of around $643 billion, which was highest ever. And now when the Indian rupee is becoming weaker and weaker, the value of our foreign exchange holding, or the total foreign exchange reserve holding of India has gone down, and it has become approximately $543 billion. So in this way we can understand that it has a negative impact on our economy, and it indirectly impact us. Now, after understanding the negative consequences of the fall in Indian rupees, let's try to comprehend how does it impact positively to us. So the positive, there could be few positive impact of the fall of domestic currency. The first and foremost positive impact is increase in export, right? So our export increases because of the fall in Indian currencies. And why does it happen? It happens because when our currency become weaker against the international currencies such as US dollar, the foreign import from our country becomes cheaper. So foreigners will have to pay less and less for buy the same quantity of goods which they were buying before the falling in the value of Indian currencies. Indian rupees leads to discourage of import and promotes the domestic industry, because we have seen the negative consequences is that the import prices increases. The domestic producers get more opportunity to produce because we are importing less from the foreign country. So ultimately it makes our economy more self-reliant. And one of the example that can be related with the current scenario is that we are highly dependent on the crude oil, and we have decided that now to reduce the dependency of the crude oil, we are innovating in the electric vehicle, right? The innovation in the electric vehicle is going at the massive rate. Why? Because we are looking for the substitutions of the crude oil of 80%. So we will be having lesser and lesser requirement of the crude oil, and we will become self-reliant. It ultimately leads to improvement of the trade balance. Why? Because if we are able to substitute the commodity that we are importing from the foreign country, then we will having lesser and lesser import of the commodity, and we will be producing in the domestic country itself. So if we will be importing lesser and lesser commodity because of the increase in cost due to fall in Indian rupees, what will happen? Our trade balance will improve. So in this, that if the value of Indian rupees falls, our investment, the investment return that we are getting from the foreign investment will ultimately enhance. So whatever amount that we have invested in the foreign countries, and the return on that will increase, because obviously the rupee becoming more and more cheaper as compared to US dollar. So whenever we will be bringing back money from the foreign country after converting it into the dollar, our return will ultimately enhance. So it enhances the return of the domestic investors who have who has invested their money in the foreign account or the foreign countries. So these are the pro and cons, the positive and the negative impact of the falling of Indian currencies. So the solution might lie in the 3-4 areas where we can work. Number one, the government can restrict or can make import more and more expensive through the trade policies. Then there is a possibility that our import will be lesser and lesser, and if our import will be lesser and lesser, the demand for the foreign currency, especially the dollar, will decrease in India, and it will ultimately lead to increase in value of the Indian currency. So the government regulation, especially restricting the import, could be one of the strategy that can be. The second thing that can be done in the current scenario is that the RBI infuses more and more dollar. So if RBI aggressively infuses more and more dollar in Indian financial market to save rupee, that might work. But again, we have seen that there is a limitation. RBI cannot go beyond the range. So if RBI thinks that yes, the range has not been crossed, RBI can infuse more and more dollar in the Indian financial market. And if the RBI do that, definitely there is a chance that the value of Indian rupees will ultimately enhance in terms of US dollar. The third strategy here would be that the government should try to implement the export promotion policy. The government should enhance or instigate the domestic producers to be more and more competitive and work for the more and more export of the Indian commodity in the foreign market. So if this policy is adopted and if our export increases, then obviously the problem of the current fall of Indian rupees can be solved, because if our export will be more and more, there will be a high supply of the dollar in Indian market, and ultimately the value of Indian currency might increase. So export promotion policy is definitely another tool which the government can apply at this scenario, and where the government is working in interest rate. If RBI aggressively increases the interest rate in the economy, then the problem will be definitely it will be solved. But again, there is limitations of the increment of interest rate, because it can also bring the recession in the economy and discourage the investment. So in increase in interest rate could be one of the solution at the moment. The RBI can gradually move towards the increment of the interest rate by 50 basis point or 25 basis point, so that the foreign investor will start investing in the Indian market, or Indian investor will not put their money in the foreign market, and therefore the supply of the dollar will increase and the demand of dollar will decrease, which will ultimately increase the value of Indian rupees. So this is all.
Let me quickly summarize the whole discussion of current analysis. So we concluded the reason of falling Indian rupees lies in 4 factors, and which is the rising of interest rate by the US Federal Reserve, high crude oil price, huge selling by the foreign investor in Indian stock market, and less aggressive policy of RBI to save Indian rupees. We also concluded that there is negative as well as positive impact of falling Indian rupees. So when we talk about the negative impact of falling Indian rupees, which includes higher import cost and inflation, increase current account deficit, capital outflow from Indian market, and fall in foreign exchange reserve of the country. When we talk about the positive impact of fall of Indian rupees, which includes high export, discourages import and support domestic industry, chance of improving trade balances, and our investment in foreign markets might become more attractive. Finally, we also look forward the solution of current problem. So the policy that can be implemented, which includes RBI may infuse more dollar in market to save rupee. Government should make import costlier through the trade policy. Implementation of export promotion policy by the government, and finally increasing the interest rate.
So this is all about through this my short video. I hope you might have got the complete, concrete and very simple understanding about the current fall of Indian rupees. If you have liked my video, Please subscribe my channel because your subscription is ultimately relevant for me. It ultimately motivates me to make more and more videos related to current economic issues across the world. And do not forget to share my video with your colleagues, with your friends, so that they would also come to know about whole scenario in a very extensive way. This is all about. Thank you so much for watching my video. I hope you must have liked it, and thank you once again. Goodbye. Take care. Stay safe. Be happy. We'll see you soon in the next video. Thank you.